Hi, Chris. Let me get my screen going here. Joe is going to take us through the first part of this presentation, and then I'll be doing the second part. So everybody should be seeing my screen now. I believe Joe and everybody should be seeing that. And then, Joe, you can take it off.
Yep, I'm ready. Let's hope everybody can hear me okay. If you can't in the chat session, just let us know. I want to welcome all of you. We're happy to have you here. Peter and I spent some significant amount of time trying to figure out what we can do for you in this short presentation, and we've decided on a couple of things. Peter's gonna handle the back end of this, and I'm going to handle the front end. And what I'm going to try to do is I'm going to try to expose to you DiNapoli method of trading using DiNapoli leading indicators. And this, I'm going to show you a trade. And this trade is going to be on gold, and it's going to be on a fairly high level. It's going to be on a weekly context and on a daily entry. But what I want you to understand is that this can be used on a 1-minute chart, 5-minute chart, 20, 30, you name it. The same thinking goes into it. And it's replicatable. It's replicatable across markets. This type of trade, I do, Peter does, all the DiNapoli experts do this kind of trade. And you know, seriously, this has been implemented since about 1985, and thousands of trades. It worked then, it works now. It's really worth your paying so much attention to. It is really relatively quite simple. So let's get started. Peter, you want to slide that chart? All right, now, with any trade, there's two parts. We got context and we got entry. Of course, there's the exit. Context, entry, and then exit. For a context, we use fundamental considerations, directional indicators, and trend analysis. Now, if you want to hear more about the fundamental considerations and the directional indicators, go to the DiNapoli Leading Indicators YouTube channel. There's a video there where I go through the whole trade up until the point where I take it over in this presentation. So what you've got there at that link is the beginning of this thing, showing you the fundamental considerations, directional analysis, and also trend analysis. And what we're going to talk about today is the trend analysis, and then we're going to talk about entry and exit. Go ahead, Peter. All right, this is get my glasses on here. This is a weekly chart, and on this chart you see some DiNapoli levels. But you also see this red line, and this red line is called the MACD predictor. And what it is it takes Gerald Appel's MACD, and through mathematics, it throws it on the screen and then projects it out. See, we're all about leading indicators. We're one of the only outfits that really does leading indicators. And so what you'll see on this screen is that the last point on that red line, which turns, I think, blue, that last point is actually out ahead of the bar. So it's leading. You know, and I know, everybody that uses this indicator knows it was going to be a trend change. So if we drop down below that line, if price action drops down below that line, we've got a trend change from positive to negative. Now, there's many other uses of this indicator, this MACD predictor indicator. There are, I mean, it's a magical indicator, but we're only going to talk about trend analysis today. And as you can see on this gold chart, the trend is up. Go ahead, Peter.
Here you go.
Okay, now what we're looking at on this chart is the daily. So what we've done is we've dropped from the weekly down to the daily. And what we can see on this daily chart is we can see that the trend is down. This was where I left off in my presentation. I actually did the presentation in Thailand. And again, that's on the DiNapoli Leading Indicators YouTube channel. And you really got to go look at that, because it'll give you the whole context for what we're talking about today. At any rate, we can see that the trend is down. basis the MACD predictor. But there's another little thing I want to call your attention to. There's a pattern here which DiNapoli traders recognize. It's called a stop grabber. And it occurs when price action goes above the MACD predictor and then immediately comes back down. Now, if you look at that previous low that occurred right there, thanks, Peter. What that stop grabber does is it tells us that the market is very apt, not for sure, but very apt to go down and pull the stops out at the bottom of that bar. So when I got a trend down and I also got a stop grabber indicator telling me that we're going to go down below that level. So what I have done is I have given you the context for the trade. The weekly trend is up, the daily trend is down, and we expect it to get down below that level. Go ahead, Peter. Now, there's two ways you can trade this. We can trade this from a short side, and the way you would do that is you drop to a 60-minute chart and you sell rallies according to the DiNapoli levels on a 60-minute chart. You can also play it to the upside. You can buy dips on the 240 or the daily according to DiNapoli levels. Now, I am absolutely crazy bullish on gold. You know, if we see gold at 10,000 by the end of the year, it wouldn't surprise me in the least. I'm not saying it's going to happen, but I'm telling you it's not going to surprise me. And again, that's from the fundamental context. I may, if we have time, get into a little bit of that at the end of this presentation. If we don't, it's over on the YouTube channel. So next one. All right. So what we're doing here, Peter, was that the next one?
This is the yearly, yes.
Yeah, I know what it is, but I think the daily, the next chart should be the daily indicator with the DiNapoli levels.
Yeah.
Showing there we go. All right. Now, the situation on the previous chart is where we left this thing. And what it is, we got a stop grabber and we've got DiNapoli expansions. These are support levels. And if you don't know how to get them, on the YouTube channel, our YouTube channel, Peter has done a basic dissertation on what this stuff means and how you can get it. If you can't go there, you can get it from our book, Trading with DiNapoli Levels. So anyway, we're on our way down, and where you can see that red level there, that was my buy point. So what I'm doing is, even though I've got a sell signal, I'm using a sell signal to buy this thing because I'm bullish. Now, if I was sitting in front of my computer trading 5-minute charts all day long, hey, I'd be happy to sell gold and take my profits, sell gold, take my profits. But because I was in Thailand traveling back here, I certainly wanted to find a way to get long. The best way to get long something when the directional indicators, when your context is pointing up, the best way to get long is on a sell signal. So what you're doing is you're using a sell signal to actuate a buy. And where I want to buy this thing is right where that OP is. I can't see the number, but it's right there.
Yeah, 31.48.
All right, that's where my buy was, and I'm flying or I'm doing something coming back. I just put an order in there to buy it. I am completely confident that that thing's going to work out. Go ahead, Peter. Next one.
There you go.
Next, yeah, right there. Next slide.
Okay, so why did you not choose to buy the COP?
Because there was a stop grabber. That stop grabber up there told me that we were going to go down below and take out that, what is it, 3209?
Yeah.
That's why I chose the OP. Plus, there was a lot of bullishness on gold at that point. So from a perspective as far as enthusiasm, a lot of people were very enthusiastic the gold market, and it lets the professionals hunt for the stops. And those stops are right down there where that red cursor is that you have. Mm. Okay, Peter, next one.
There you go.
All right. The market got down. It filled me. It supported. I mean, this is a trade we haven't done this 10,000 times since 1985. We haven't done it once. I mean, this is just real basic stuff that you should be able to take home after watching this. And if you can understand what these points are, not hard to learn, you will actually be able to implement. All right, now we're down there. We get filled. We do a different ABC up. and we see that there's a COP. What's that number there, Peter? I can barely see it. 34.48?
34.48, yeah.
All right, so there's the profit objective. Boom. Next slide. We hit the profit objective. This is where you take your profits.
Yeah.
Context, entry, directional signal, take out the lows, take out the stops, get long, take your profit. I mean, this is but simple. This is basic DiNapoli techniques. Now, I didn't take my profit there. Well, why didn't I take my profit? Because I'm wildly bullish on gold. I don't have enough of it. I still don't have enough of it, and I'm looking for higher numbers. But this, if you were trading on a shorter term basis, would be the point at which you would take your profits. Next one, Peter.
There you go.
All right, now we're talking about higher numbers. Peter, can you read that OP?
Let's see. I can zoom in slightly. There you go.
Okay, good. I got it. I got it. Yeah, thanks, Peter. 36.49 is the OP. Do I expect that to be made? 100%. I mean, I can't tell you your trade, if you're long, is 100% trade. No trade is. But what I can tell you is that I absolutely expect that number to be made. All right, where's that XOP, Peter?
39.75.
All right, we're going there. We're going there. I don't know if we're going to go there tomorrow, if we're going to take a couple of months. We're going there. So this is the basis for the trade. Is there another slide?
Not before I take over at the moment, no.
All right, so we're going to let Peter take over from now. And if there's any time at the end of this, I want to talk a little bit about what I see future in the stock market, what's going on in the country. You know, since I have been living overseas in Thailand for many years, I get a different perspective of what's going on, and it might be worth your while if we have time. But if we don't, again, just get on our YouTube channel and you will be able to see what my thoughts are. Take it away, Peter.
All right. Okay, so I think where Joe probably lost everybody is when he said he's using a sell signal to buy the market. So I remember starting out with this method way back in 2003, you know, and I didn't get that. I didn't get the fact that you need to wait for the market to actually go into a sell signal like we had here on the daily to join a higher time frame context and uptrend. So, and a lot of traders probably already missed this, and I see some hands already raised, you know, okay, we're confused as well. We got lost on that one. So the major upgrade we did here on the Ninja indicators, I'm going to show next, is you'll see the gold chart, the one Joe showed initially, with some colors on. So all what this is telling me is, you know, okay, we're in a sell signal on gold. Let's take this first one. Is this a sell signal to get excited about being short? Or do I need to be cautious and say, hey, this thing is actually a sell signal that's somewhere going to give me a position to be long the market? And that's what happened over here. It happened over here as well. And again, on the sell signal Joe talked about, it told us, look for a position on the long side. Don't get too excited by the sell. So this is just a way for newer traders to don't get blindsided by just indicators changing and kind of seeing the higher time frame context. Now, I still use this. Joe obviously don't, because I mean he built this whole method. So I use this because this method of looking at different time frames can get so complex that you can sometimes get caught up. You know, there's so many signals and there's cognitive dissonance. What do you look for? So the one thing I actually wanted to show in a live demonstration is a chart that I think is and the indicator how it works. But let's first pull up a chart. Interestingly enough, this is a chart of coffee. It's a 20-minute chart. And if I throw up the indicator here and I tell you this is a fantastic indicator, you'll tell me that's bullshit, because, I mean, it gets whipsawed here, it gets whipsawed there, it gets whipsawed over here again. You won't believe me. But look what happens when I throw on the colors. So what the colors told me here is this first sell signal is to be bought. The teal color here is telling me this is a fading opportunity to get long the market. This purple one is telling me this is a very, very strong probability that the market could take out this low. Again, red telling me this is one to be sold. Again, sell. Again, sell. So this the upgrade we did on the indicator is to help new traders, know where to fade the indicator and where to join the indicator. And if you don't know what that means, you should be reading the book, What Fade Mean. And that's the major upgrade we did. The purple colors is telling us a stronger trend. The red one is telling us look for a slight reaction. And we can discuss that if anybody wants to subscribe to the indicators. But this is a really, really good way of not getting caught by an indicator changing when actually the indicator should be faded. And I think, Joe, I don't know if you have a comment on that, but I think it's a really great way for people to, it's like a crutch when you start out, not to get blindsided by fading opportunities.
I just have a question. This is only available on Ninja, right?
Yeah, that's right. It's only available on Ninja. We haven't included it in any other of the indicator packages as well. We can talk about the costs and the special. We're going to present the attendees later, but yeah, it's only in Ninja at the moment.
Peter, how long did it take you to come up with this coloring scheme?
10 years, I guess.
That's what gets me about new traders. They think they're going to come in with $20,000, $30,000 and kill the market in the first 2 months. Guys, it doesn't work that way.
No.
No, not at all. I mean, I started out, I made some pretty good money when I started out, and because of money management, I lost half of it back. And then I started figuring out how to trade. I think you're, if you really want to get good, you're looking at an absolute minimum of 5 years. Would you agree, Peter?
Yeah, definitely. And with this, I mean, it helps. Obviously, the colors is telling you, hey, okay, you need to be selling. If you don't have the DiNapoli leading indicators, the DiNapoli levels and the Fib tools, you won't know. And if you don't know how to draw them, then you don't know where to sell. So at least this thing is telling you, hey, don't buy the signal, you should sell it. But knowing where to sell, that's where you need to know your DiNapoli levels. So that's
so Peter,
the other side.
So Peter, these colors, they're explained somewhere. I mean, when somebody gets the program, they're going to know what colors mean what.
Yeah, that's right. I actually wanted to show the settings quickly. So when you add them, it looks like this. It's called DiNapoli highlight bars. It's got default. We use default time frames. So it's built on the default time frame. So if you have a 20-minute chart open, it will probably look at the 20, the 20, the 60, and the daily. If you have a 5-minute open, it's going to look at the 5, the 20, and the 60. But if you want to override that, it's got an override function where let's say you have a specific time frame you have tested on a market, you can override the features here, and then there's all the different colors. You can set the settings for them, and what each one means, that's to be explained outside of this webinar. But the crucial thing to take from this is the colors tell you whether the indicator is going to really give you when it, let's say, it crosses into a buy, if it's really going to take you up, or whether this is a good chance to actually sell, as Joe used the daily, which was in a sell, to buy. So this is just to help traders not get confused.
Peter, I want to get back to what you were talking about earlier. It was 1989. I was doing a seminar with Jake Bernstein in Chicago, and I first explained to people how you use a stochastic indicator when it went into a sell in order to do a buy, because one was high time frame, one was low time frame, and everybody in the room got pissed off because they wanted a sell signal meant sell. Well, look, if you get a sell signal, you want to sell it, we can do that. You drop your time frame and you sell rallies. Okay, that's perfectly legitimate. But what I wanted to do to add to what Peter said, in my opinion, maybe Peter, feel free to disagree. I don't think there's a way to make money. I don't think most people could make money in these markets without understanding how to slide the time frames around. That's my opinion.
Absolutely not. There's no way. Even just looking at this coffee 20 minute, I mean, when you see colors go from green to black, it's telling you something's happening on the higher time frame. And
Exactly.
if you don't know what the other time frames are and what to look for, there's no way. You're not going to make any money. No, but definitely not. So yeah, I think this is a major upgrade. To me, it took, as I say, almost 10 years. There's been a prior version of this, but not with as many and as complex as this one. So I'm very happy that we can present this to NinjaTrader clients. I think it's a really good opportunity. So I think we should take some questions now, and then I'm gonna go into the next slide, which is just the learning path and the special we are presenting now. So if anybody's got questions on what Joe did here on gold, or maybe on the colors, feel free to type it in the chat, and we'll try and answer those questions. This is not going to be an hour-long webinar, I think, but it's supposed to be power-packed with just, this upgrade and not getting blindsided by indicators changing without you knowing why they are changing. Okay, questions, anybody? I recognize a lot of names there.
Hey, Chris, how you doing, buddy?
There's Chris, yeah. Frank's asking questions on gold now. Let's start with that one, Joe. What's your thoughts on gold at the moment, if you want to quickly, or do you want to leave that till the end?
Well, we can talk. I mean, I can just give you a bottom line. Gold to me is one of the best things you can buy right now. Also, certain other commodities. I'm on gold, silver, palladium, and I have a general fund, commodity fund. You simply have to be long some of this stuff in order to protect yourself from what I see could be an absolute tragedy going forward. So yeah, I want to be long, but and Peter will confirm this, is that we don't just get long because we want to be long. We don't do that. What we do is with DiNapoli levels, which we haven't talked a lot about here, but there are specific DiNapoli levels which allow you to get long at good places. So if you get some negative news, market comes down, it hits those buy spots, you come home after a hard day's work, and you're in profit. You're in profits right away because you're buying at the right place. If you just go in there and buy gold at the market, God knows what you're going to suffer through before it goes your way.
Yeah, exactly. Okay. Someone's asking if I can show the indicator on the NASDAQ chart. So I'm gonna do that next. Let's look at the next question. What is your time frame when you are bullish on gold, Joe? If you have to say.
Any longer term time frame that will go into a sell signal, I will use as a buying opportunity. The level at which I buy it will depend upon how much gold I have. So if I have enough in my portfolio, I will choose quite a low level. If I don't have much and I don't have enough, I'll tell you that right. I have Bitcoin too, but I don't have enough. I will choose a higher level. With DiNapoli levels, you get different points at which you can buy. Some are higher, some are lower, some are stronger, some are weaker. And when you get to understand the concept, you'll know right away which are which.
Okay, I think that definitely explains it. Then I've got a question here. Someone wants me to show the indicator on today's NASDAQ chart. So I think that's a good question. I haven't looked at NASDAQ today. I'm pulling up the indicator, and let me get it on the screen here. So this is just a 5 minute. I'm just looking at a normal 5 minute with regular trading hours. And our first sell signal we got today, the colors told us that's a buying spot. That's a buying opportunity. Now, this is very basic. It's not telling us it's going to make new highs. It's just telling us this is a high probability fading opportunity. Look for support for at least a bounce, which of course we got. You can see a proper bounce. Same with this
Peter,
red.
Peter, hold on 1 minute. On that last move, that ABC came right to a COP where you could take your profits.
Let's look at that. A, B, C. Yeah, there's your profit
There you
objective.
go. Why do you think this? See, what people don't. Why do you think the market stopped there? It didn't stop because of magic. I didn't know we were going to put on a. Really, I didn't know we were going to put on a Nasdaq chart. I had no idea what we were going to do. Right. That thing stopped right there because there was a COP. Why did gold stop where it stopped when we went up to about, what was it, 345, 350 back a couple of months ago, May or so? Why did it stop there? Because we were at a yearly number, a yearly DiNapoli levels. If you guys haven't seen how this thing works, start
there we go.
doing
That's the number. There's the number on the yearly chart. We actually had a slide on that. Let's quickly go back to the Nasdaq. So, and then look at this. So, okay, this one is telling us kind of it gets neutral. And then the red one is telling us this is a fading opportunity on the sell side. Look for resistance and a pullback. And that's what we got. So, and as Joe said, you need to know where to buy. There's your ABC down. There's support. You can look for more support levels. There's a whole bunch of different ways to calculate support. There's probably nice retracement levels as well. But there you go. That's the Nasdaq chart for today. It tells you when the indicator is supposed to be faded, and when it's just a normal probable sell where it can run for some stops, etc. And again, this works down to the 1 minute. I love the 1 minute on Nasdaq and E-mini with these colors. It works on the 1, the 3, the 5, the 20, and if you have all your charts open with all these colors on your different time frames, and you see a whole bunch of different ones, it sometimes just tell you, turn off, wait for things, to light up in the same direction sometimes. Then you expect the bigger trends. Otherwise, you can just scalp it on levels for small profits. But it just gives you a high level view of what the market is probably going to do. Okay, let's see if there's any other questions. Yes, a good one. When would the color change? Let's say we are talking about the one on the far right. Would that be after the close below the MACD? Yes, the color will change on a closing basis. So it will wait for once, let's say this bar now, this green bar over here is in real time. It will be black because you need to wait actually for, the market needs to confirm it's below the MACD in this case. And once it closes, you'll see the color go light green here, which is telling you it's a fade buy. You'll see when you open up the indicator, it's telling you fade buy, which means, look for support. So the colors wait for an actual close. They don't light up in unconfirmed situations. I think that's a really good question. Let's see, any other questions? So when the color is black, do you wait? Yeah, exactly. When the color is black, it's telling you look at other time frames. It can tell you it's just if it hits a nice support, it's just a scalping opportunity. No real strong trends, sideways action like we've seen today, pretty sideways. So when there's no colors, there's no trend. That's what black means.
Peter, I have a question actually, and I don't know if we can answer it in this venue because I'm sure the answer is fairly complicated. But can you give us some insight, just some basic insight into what controls these colors?
Just the MACD, Joe, basically, on different time frames. So the MACD predictor on different time frames control the different colors, and also
makes sense. Perfect sense.
Some of the attendees will recognize the word of dynamic pressure. I see Chris is here; he will definitely recognize that word. That is a bloody difficult one to build into an indicator. How do you gauge dynamic pressure? It's a visual, very subjective thing. So what I've did is I try to make it more objective using a little bit of maths. That's where the purple colors and the teal colors comes in, and that's usually like in the coffee example, when you have a purple color, that's usually where you expect the fade to really at least take the market to a new low. While the other one is just a normal fade, I want to say, where you don't have a strong trend yet. So it tries to do both, not look at just trend changes, but look at the strength of the trend as well. And I think that's major. That's why I call it the major upgrade. Yeah. Any other questions? Let's see. Chris, you're good. Okay. Yeah, I think
I want to just, there's a question in here which we probably answered already. What is your time frame? When you're bullish on gold, Bitcoin. I'm bullish. The only question here is how do you enter, and that is we have the answer to that question.
Yeah, exactly. So fade. Wait for the fade. That's the answer to the question. Let's quickly go on. I think, yeah, it looks like we pretty much covered all the questions. So I don't want to really drag this out much longer. I think the most important now to get to the end of the seminar is how do you, if you don't know DiNapoli levels, and I do see there's quite a few people which I don't recognize, and whoever was watching the recording afterwards, how do you get started in learning all of this? Easy, go and visit our website, fibtrader.com, and the best would be do what I did. Just purchase the book first of all. Together with the book, you get a 60 days access to the DiNapoli forum, where you can also go through decades of questions and answers and do more studying. The Enome course is also good. Joe, do we still have that? I think you still have a few of that.
It's an online product now, the home, workshop.
It's online.
It's an online product, and it also gets into money management, which is very tough to teach people.
Yeah.
But it gets into that.
That'll be your first step, getting the book. There's a DVD as well. I think that's also online, right? I think that's also been changed.
We haven't made it online yet. We still have some DVDs left. We're going to put it online, and we haven't got around to it.
Okay, there's the DVD. DiNapoli Academy, that's the online one where you can go and study, looking at videos, etc. And then once you've done all of that, would be a good time to subscribe to our newsletter. The newsletter is not going to make a lot of sense if you don't know DiNapoli. We don't really give buy and sell recommendations, but we do really good market analysis, and it's a good tool for you to gauge your own analysis against an expert's analysis, I want to say. And then
this is done by Pieter, and I'll say we've had a couple of DiNapoli experts doing this newsletter over the past 30 years. I'm telling you, what Pieter does with this thing is just really incredible. He does a wonderful job. So if you're into this stuff at all, I just highly recommend it. For the cost, it's an amazing product. It really is.
Yeah. Thanks, Joe. I think what really stood out to a lot of attendees, maybe some of them might listen to, was when I actually showed the track record of my own trading.
That was back in April in Bangkok, right?
In Bangkok in April, and I don't think a lot of educators out there actually show their real account. Just for people to actually see that we are real traders. We don't just talk; we actually trade. So that was at the basic seminar. I know that was actually at the advanced seminar in Bangkok. So there's 2 seminars. You do a basic first, and then after that you can attend a real a live trading seminar with Joe and me, or usually we do it together. Basic seminars, there's a whole bunch of mentoring experts you can attend a basic seminar with, but you need to either have done DiNapoli Academy or you have had to read the book, otherwise seminar or the newsletter won't make any sense to you. So that's how you would start to get learning about learning this. And then, as I said, the client forum, that comes 60 days with the book. But a lot of traders actually, once you subscribe to like Ninja, you will receive free access to the client forum as well. So you get 60 days when you purchase the book, and once you start subscribing to NinjaTrader Indicators, you'll get free access to the client forum anyway. Yeah, so we've got a special offer today for the attendees of this seminar and people who still listen to the recording afterwards. So if you buy a month for $80, you get a month free. So it's basically half price, and the DiNapoli highlight bars will be included. Usually I only include this for seminar attendees who I know have actually gone through the ranks and actually understand the concepts. But because you have attended this and you kind of get the grasp of, not all buy signals are actually used for buying. You can sometimes fight that and use it for selling. We're willing to include the highlight bars and enable that as well for attendees of this webinar. And then if you continue
Oh,
with the subscription, you retain the
Peter,
highlight
Peter,
bars.
hold on one second. This is for people to be able to subscribe to the DiNapoli indicator package inside Ninja, right?
Yeah, that's right. That's
Okay.
right. With the colors. So the DiNapoli highlight bars is the colors, but you get all the other indicators as well. The $80 you get all the indicators. You don't get the highlight bars. That's usually not included. But with this round, it's included. And if you continue with your subscription, you will retain the DiNapoli highlight bars. And I need to emphasize this. Usually, I enable this only after someone attended a seminar, and usually even after doing the advanced seminar. So this is a very, very unique offer. We don't usually do this. And then also together with the Ninja indicators, as I said, you'll get free access to the forums. That's valued at $45 a month. And then I'll also throw in a 30-day trial to the newsletter for those who want. But as I said, you need to at least have an understanding of DiNapoli indicators if you want to really benefit from the newsletter. And that's valued at $79. So I think it's a really good deal. If you subscribe to this on fibtrader.com or FibTrader, the Ninja indicators on fibtrader.co.za, you'll get a question or a whole video how to install this. And then once you send me your machine ID to activate the tools, please tell me, I attended the Ninja webinar, activate my DiNapoli highlight bars. That's really important. Otherwise, I won't know to activate it. So I'm just mentioning that as well. And that's basically our story today, I think, Joe. So not too long, I think power packed, and a lot of value.
If people want to know how they can get started on this, Trading with DiNapoli Levels, the book, is your very basic starting point. It's been translated into 12 different languages. It's a good book. It's not new, but that doesn't mean anything. What's in it works. So that's the important thing. You can get that on Amazon. You can get it through fibtrader.com. Up to you guys.
Yeah, yeah. We have one last question here. Can we look at the 5-minute E-mini today? Let me just switch NASDAQ to E-mini. That's easy. Let's quickly do that. First, let's get that up here and see how it looks. It's pretty much going to look the same as NASDAQ. Fight the first sell, fight the buy over here. A normal kind of little bit of a downtrend, which tells you it's not going to go far. It's black bars. Yeah, it tells you it's a pretty sideways day actually. Okay, can you show the contact to subscribe to the offer? Let me get that up here quickly. Give me a second. I just want to quickly pull it up over here. So that's going to be at FibTrader. Let's go to the website first. I think that's just going to be the easiest. Just 1 second. There we go. Okay, so this is fibtrader.co.za. And then over there, you've got a software section. And right at the top, you've got NinjaTrader. You just go there and you hit get it now. So very simple to get going. And then once you receive the confirmation, you reply with the email, there's instructions, and you tell me, together with your machine ID, which I will ask in the instructions, you tell me, I attended the Ninja webinar, I want the colors, the highlight bars, and I'll activate that.
Okay, now Peter, describe that website again, because you didn't say the word Z, and so some people might not understand that.
Fibtrader.co.za, Z-A-Z-A at the end.
Okay.
So not .com, but I think on .com as well, we can go to that. There's an order form there as well, which is Joe's website, and it will redirect anyway to this one. So you'll find it. If you don't, at the beginning of this webinar page, my email was there. Just send me an email. So there's enough ways to reach us, and just tell us you attended and you want to make use of the special offer.
There's are you pretty much done, Peter?
Yeah, I'm done. Thanks, Chris. I see you typed it there in the chat. That's nice. There you go. There's the link.
I want to make one comment about sizing. You know, this is something that only an old timer. I've been trading half a century, actually, 55 years. And, you know, we're technical traders primarily. What do we look at? Open, high, low, close, volume. And you can do that in a whole myriad of different ways. You can produce the MACD predictor. You can look at different time frames, produce the colors Peter was talking about. You know, you can massage those things in many, many different ways. Market profile, right? Okay, here's what you're missing. If you haven't been in this 15 years, 10 years, 20 years, here's what you're missing: sizing. Sizing is absolutely critical. Money management and sizing. So to give you an example, I think the world is in a pile of shit right now for a whole lot of reasons, which I don't think we have time to discuss. For the last couple of years, most of my money has been in safe stuff. When I say most of my money, I'm talking 70%, roughly. And I'm trading with roughly 30%. None of my positions are very big. There's a lot of spreading. Okay. So what I always do with all my trades is I make sure that they're sized properly. I don't get too much of anything, or for that matter, too little of anything, because there's no point having it. So sizing is very difficult to understand. Trade-offs are very, very difficult to understand. I mean, right now I've got a long short portfolio. Longs are doing okay, shorts I'm doing very good. But the sizing is where I can hold stuff until I feel I should get out. I can't, you know, honest to God, I can't remember the last time I was forced out of a trade. I simply can't remember. I can remember times where I decided I would get out of a trade. So if you get your sizing right and you have leading indicators and you can get a little experience under your belt, there's a real possibility, especially if you're, you know, if you're young, you learn this stuff. You've got 20, 30 years ahead of you where you can benefit from it. If you're an old guy like me, maybe you got 2, 3, 4 years you can benefit. But boy, for a young guy to learn, this stuff is all here. It's available. It's available for you. I had to create it. Peter helped create it and make it better.
Yeah. Yeah. No, I mean, I don't know how I would trade without it. So yeah, there's a question. Do we cover with the DiNapoli level fib time, Joe?
No. I've done a lot of research on fib time. It has some value. It's not worth my time to do fib time.
We like to keep it simple.
Yeah, we want to keep, if you look at if we go back to any of the charts I showed you, there's two things on all my charts. MECD predictor, DiNapoli levels. That's it. Now, occasionally I might throw up something to look for a directional indicator, but that's it. I don't want to overcomplicate things. And the minute you start putting in time, you've got an overcomplication, and it's not high quality. That's the thing of it. It's just not accurate enough for me.
Yeah, I agree. Keep it simple. Okay, looks like that's all the questions. I think we've done pretty good. Chris, you want to wrap this up?
Is Chris still here?
Yeah, Chris is here.
Has he gone to sleep? Hello, Chris.
Well, there's one more question. Do you use fundamental analysis?
Yes, and I could go through a tirade right now on what my fundamental analysis is for the situation right now. I mean, I believe World War III is in process. So if you think I'm crazy, that's what you think. But I was around in the Vietnam days, and Vietnam didn't start all at once. It took a while. It took a couple of years to get rolling. So we're in the beginning of a real mess here. And I could go on and I could talk about that mess, except we're out of time. Go on to DiNapoli Leading Indicators. Take a look at the gold video. Should be one of the first ones. And you'll see a pretty good fundamental analysis. That's part of the context. I mean, if you look at the fundamentals now, the situation this country is in, where we're supporting genocide and protecting pedophilia, on and on and on. If you look at this, it's part of the context. And then more context indicators go on and talk about various other indicators that we analyze, directional indicators, trend indicators that we use to analyze context. Most of what today's been talking about has been trade entry against DiNapoli levels with only looking at the trend. But yeah, I do consider fundamentals. I do. But the fundamentals, I mean, they're all bullshit, right? I mean, birth death rate completely skews the employment reports. And inflation, come on, give me a break. If you look at shadow statistics, you are looking, if you are looking in the last 5 years, 2020 to 2025, using compounded inflation, you're looking at 105% inflation. Figure it out. Go and look, ask it. 105% inflation. Now, if that is put on the backs of working people in the middle class in this country, and these, that we elect or that are elected to public office, they just bust us, and that's the way it is. And this isn't good for the country. I think shit's going to happen.
Mm-hmm. That's a good take.
Some fundamental analysis to close the show.
Yeah. No, I think, as you said, Joe, the gold analysis you did on the channel back in Thailand was really good. I think that's good fundamental analysis as well for people to go and look at.
Yeah, May 5th is when that was recorded, and absolutely everything that I talked about with respect to the gold market worked out. I was negative the stock market, however, and that didn't work out. But I have an interesting comment here. Look at the stock market, not relative to the U.S. dollar. Look at the stock market relative to gold.
Yeah.
It's down 15% this year. 15%. Exactly. And if people wonder, what the hell's going on with the stock market? Why is it up? The Venezuelan stock market, when measured against its currency, do you know how much that is up in the last year, Peter?
No idea.
Yeah,
but it's going to be up. It's going to
be up, right?
Yeah.
All right, you ready for this? 470%. Because of the deterioration in the currency.
Yeah, currency. Yeah.
We are being screwed.
Yeah. Yeah. No, I like to look at
Peter,
gold.
if you had $3 million 5 years ago, it's worth about 1.5 right now.
Mm.
Think about it. These poor bastards that slave all their lives, saving taxi fare to get on buses, trying to save $2 or $3. I'm not, I'm talking about the working class. I mean, I'm going back in time a ways. All right, that money was saved back in the '60s, '70s, '80s, '90s, and it got cut in the last 5 years. It got cut by 50%. Think of it.
Yeah. No, exactly. I did post that gold S&P ratio chart the other day on the forum. What's interesting to see is how it came down from the 2000s. If you look at the peak in the 2000s where we're at the bubble on the NASDAQ.
Right.
If you own stock, I mean, we're way past those highs on the NASDAQ. But if you compare that to gold, where
where are we?
0.382% retracement.
Come on. You're
see.
Kidding me. I didn't see that. I got to get on there and look at that chart.
Let's see if
that's incredible.
Pull that up.
Man, that is unbelievable.
A good chart to finish off this webinar. Let me quickly jump on.
That's a real wower, that one. I didn't see that on the forums.
Give me a second. I'll be there now. Well, that's maybe a good way to show the forums as well. So just so people can see what's in there. So there's the forum. There's posts
30 to 40 years worth of postings. Can you believe it?
I see Lawrence did a post. There's a seminar in Sydney. Look at that. You can go and attend a seminar in Sydney. That'll be nice.
That's in September, I believe.
Here's the chart of gold in equity.
Holy shit almighty.
In gold.
Holy criminy.
Yeah, so it recovered slightly from the 2008 lows. Equities outperformed gold, but it's only gone up to the 0.382 from 2000s. And look at this year, it's down, bam. Equities underperforming gold. So yeah.
Well, it tells me that the US dollar is no longer the reserve currency. We may use the US dollar in transactions, but it's no longer the reserve currency. Gold is.
Yeah, and I remember posting this chart back at the end of 2024, Joe. And I said, well, it looks like it's a year where you rather want to own gold than equities, and it seems to be that's the case. So, yeah.
Thailand, of course, gold is culturally desired. People buy it all the time, just to have it, and they think it's a store of value. And I know about 2 or 3 years ago, I was talking to a lot of my Thai friends, and they were going, "Oh, gold's awful high. Gold's pretty high." And I said, "Yeah, it's going to go a hell of a lot higher." And to a person, even though they were Thai, they were not anxious to buy gold. And every pullback, I'm buying gold. You can buy physical gold over there, little tiny bars. And it sure proved. I mean, it's just about doubled from where I was talking to these people. Yeah. It's just,
and can you imagine this ratio? This is a yearly chart, Joe. Can you imagine this ratio? Look at dynamic pressure on this, and if you imagine this ratio going through the MACD predictor here on the yearly. Imagine that.
Yeah, I think the shit's going to hit the fan here. If it doesn't tomorrow, it's going to next week or next year. We're primed for it.
Yeah.
Okay. So I don't know, Peter. I don't know about you, but I kind of think I can't get enough gold. I won't just buy it at the market. I have to wait for pullbacks because that's the way I trade.
Yeah. I think one last question just came in before we wrap it up. Bitcoin. Okay, Chris, another one. Okay, so 2 more questions. Bitcoin is we can quickly look at Bitcoin, but I believe Bitcoin is at a yearly XOP, Chris. It's at a resistance where you want to take profits on Bitcoin. I don't know whether it's going to bust through that, but it's telling me it's a good spot for Bitcoin, to take a breather, at least in the interim.
Fabio's got a webinar on. We haven't posted it on DLI yet.
We did actually. I did post it last week or a couple of days
You
ago.
made it live? Is it live?
Yeah, it's live. So there's actually on the channel, on the YouTube channel, a video about that, Chris. You can just go and watch it. Yeah. Fabio did that, and then last question.
Fabio is our expert, our Bitcoin expert. He's down in Brazil.
Yeah, he's done a good video on that. I posted it a couple of days ago.
I didn't know that went live. Great.
Yes, someone's asking. I have some experience with DiNapoli technique. I've always been and have seen quite impressive results. My main struggle has always been exiting bad trades promptly. That's where I consistently failed. Is this topic of exiting bad trades covered in the DiNapoli Academy program? Joe, you'll know better than I.
I don't think so. I've got to be straight with you. I have the same problem that this gentleman is talking about. I am so confident in the efficacy of these levels that I will sit in a trade longer than I probably should. It's a matter of experience with the levels that tells you how to get out. Sizing. That was the next thing I wanted to say, Peter. Absolutely. You just got to get the sizing right. I remember a lifetime private seminar. You weren't there, Peter. I was doing it in Bangkok 2.5 years ago or so. And I was putting on trades and SMH, that's a semiconductor thing there. I trade the shit out of that thing. Anyway, it came down and I had two levels in there. And because it was a private seminar, I was distracted. I ended up getting twice as much of it than I wanted. I could have handled it twice as much as I wanted. But I told the guys, I said, I got to get rid of this. I don't care if it's going up or it's going down. My sizing's not going to be right. Now, fortunately, I made a little bit on it, but I got my sizing down to the right point. Sizing is so crisp. You talk to any professional trader, and I will talk, we're talking 10, 20 years experience. I mean, I've got 55. Peter's got, 20, 25. But you talk to any professional trading, it's all about sizing.
Yeah, exactly. The big thing, I think, for me, XOPs, if I see XOP break on the time frame I entered, let's say I buy pullback and XOP goes, I'm out of that thing. Bye-bye. I'll look for the next trade. That's my point where I really say if it starts to solidly break XOP, then something has changed. Yeah. Yeah. Sizing. There's Chris confirming sizing again. So yeah, that's the big thing.
Look, here's a trick, or here's something that will let you know that you've reached a certain level in your professionalism and trading. And that is that you disassociate yourself from the trade. This is really what happens. I mean, when you're in something and you're a new trader, it's going up, it's going up, it's going down, I'm going to cry. Now, when I'm in a trade, I got my feet up on the table, I'm looking at the trade. I don't want to put this too strongly, but it's kind of the truth. I just don't give a shit. I manage the trade. That's all I care about, is managing the trade. And I'm disassociated from it.
Exactly. I think that's it, Joe. I got a message here from Chris at Ninja telling us that's our time for today. So I think that's a good one.
Yeah, thanks to the attendees and thanks to Chris. Chris from Ninja, thank you. And I hope this has been some value to you. I really do. That's why we're doing it.